Hello, everyone. My name is Dan Gardiner, Director of Research at Edison, and I'm very pleased to be joined today by Dr. Joachim Fleing, Head of Investor Relations at 3U Holding. We're going to ask a series of questions to get him to describe and explain the company's strategy. So I think, first of all, Dr. Fleing, perhaps for the benefit of investors that are not familiar with the business today, could you introduce the portfolio of businesses that you're invested in and state the strategy, the overall strategy of the company and why it is invested where it is?
Thank you, Dan, and thanks for the opportunity of explaining a little bit of 3U Holding. We are a public company and listed on the Frankfurt Stock Exchange Prime Standard since 1999. Still, where are we today? 3U Holding emerged after some turmoil and restructuring 5 years ago as a management holding active in 3 segments. The one is renewable energies, the other is SHAC, which is basically e-commerce. I'll talk about that later, and ITC, information and telecommunications technology. Please note, on the one hand, that the strategic focus is and remains cloud computing and e-commerce. Please note also, whatever we do with ambition. That is, there is some vigor and some drive in this company, making the focus we have chosen and we feel is the right focus for us, cloud computing and e-commerce, an area of intensive activity from management. Sometimes we're being asked by investors, hey, why are you such a sort of diversified conglomerate? You have that usual discount, and why don't you streamline your company more? Well, there's 2 issues to that. One is right in this current pandemic situation, diversification did what is supposed to be. It helped to minimize risk. We had only limited impact by the coronavirus and the COVID-19 and the measures taken to combat it. So the diversification this year proved its worth. Still, the other point to make is, yes, a streamlining of the company is not beyond scope, but we will take that opportunistically to make sure that the strategic focus we have chosen, cloud computing, e-commerce, becomes ever more clearly visible in what we do and in the numbers.
Perfect. Thank you very much for that. And you mentioned the drive and the vigor in the company DNA, and you also talked about cloud computing. I wonder in that context, we should perhaps talk about weclapp. So I know it's a relatively small proportion of your sales today, but it's possibly the most significant part of, or could be the most significant part of the group going forward, at least in terms of valuation. Could you describe the weclapp business, what it does and how it's differentiated within its market?
Right, Dan. Yeah, I fully agree. Also from the perspective of the company, weclapp is the most thrilling and the most exciting part of our portfolio. Weclapp was established in 2008. And its purpose and its business model is to create a cloud-based ERP platform. ERP is enterprise software, enterprise resource planning. Everybody knows the big shots of that industry, which is SAP, Oracle, Microsoft, and the like. Weclapp, please note, is different. It is different in that it is a genuinely cloud-based software system. other than the vintage software, it has not, there's no need to install it on a company's server. It's not the client hosting the solution, but whatever happens is on the weclapp platform. This is a scalable server farm which helps make sure that all our clients work on one single complex. That is, all updates, all new versions are at the command of our customers at switching, at turning a switch. What's more, all the data are available on that platform. While traditional ERP systems don't talk to each other from client to client, all the data of our client are on one platform. That is, we do have the potential to create the big data pools we need to also create artificial intelligence algorithms, and we're currently working on that. To make sure, from that point of view, we say, yes, we are technology leader. As this software is entirely created and developed by ourselves, no add-ons from third party, which we would have to pay royalties to, we can also claim that we are the price leader. And if you have a look at what's currently on the market, you will find indeed, yes, weclapp is price leader. And having talked about ambition, our ambition for weclapp is to become market leader. Does that mean we want to overtake SAP and Oracle in terms of revenue next year? No, it doesn't. But the ambition is to become the preferred ERP system for small and medium-sized businesses around the globe. And to get there, we find that looking at it, even with a critical impetus, we find that there are no inherent barriers to growth.
Okay, thank you for that, and that sounds really quite exciting. And perhaps then you've highlighted the potential, at least, of weclapp. Could you talk a little bit, perhaps in more detail, about the initiatives you're currently working on to maximise its potential and drive the growth over the next 12 to 18 months?
Certainly. Let me add one thing, looking at the revenue development at weclapp. The platform was brought to market in 2013, and we started them with 0 revenue and 0 customers. weclapp grew by over 100% CAGR over the past years. Currently, we are confident to reach 7 million revenue this year, coming from 3,100 enterprise customers. That is, the growth we have shown for us is an indication that we can further grow over the next years. And indeed, right now, we are looking at another 50% growth in 2021, organic growth, that is, to 11 million. And given the fact that the business model is software as a service, we do have all those long-term contracts showing us that today we've got 7 million of revenue for 2021 already in the box. The business model calls for advance payment for 24-month contracts. That is, right now we have the monthly revenue bookings for the next year already done and up and running. So I said that we have no inherent barriers to growth, but having no barriers doesn't mean that we actually go for growth, but we do indeed. So what are the 6 growth drivers we see? Number 1 is product enhancement. What we're looking at is developing around the globe, around the clock. We have a developer team in Mumbai working exclusively for us, although this is a little hampered right now by the corona effects in that wonderful country. And we are looking at establishing a developer team in California over time, but this again is a project that has been postponed a little bit in view of the current overall situation. What do we do to enhance that product? New functionalities enhance our already award-winning usability and user experience. It is only now that we have won the German ERP System of the Year award for the 4th time. That is, what we're doing there is also being recognized by the experts from universities and from the industry. The second growth driver is our excellent online marketing. Guys from Google, just close your ears for a second. We don't pay any fees to Google for AdWords or something, but it's content, 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 content. We have a team of editors providing news and blogs and what have you, leading interested parties onto our very informative and basically neutral information about ERP systems on a host of internet websites. And this is where our customers come from. We don't run after the customers, but the customers find us. This is why we have already customers in 35 countries, because it's the internet. It's not the sales guy in Würzburg, Germany, making cold calls. It's the internet, which is the wide area where people see our lighthouse in the dark. So this is quite successful. The entire growth we have shown over the past years comes from this excellent online marketing. So what we're trying to do now is we also, let me take a step back. 19% of our customers are IT service companies. That is, it is the experts themselves who say, we can't find anything better in terms of price performance. And we want to harness their excitement to make them sales partner on location. And we've got now, it's all about networks. And this again is a benefit of the platform. You can network on that platform. These service partners, as of now, create new add-ons, new application programming interfaces, add new software to our weclapp system, making it larger and richer every day. So we want to encourage them to extend the reach in terms of industries. Right now, besides of IT service providers, we have a lot of trading companies, e-commerce, retail, wholesale, a lot of advisors in the marketing, media and graphic business. So where we are looking at is to extend the share of our manufacturing customers from the current 14% to a far larger share in our portfolio. The second is we want to extend the reach to larger companies. When I started at 3U 2 years ago, the largest customer we had 150 licenses going. Right now we're at 256 for the largest existing customer, 252 and then 249. That is, you see, we are already successful in addressing larger companies. When we started, we had only very small, tiny startup companies, but now the portfolio of our customers shows even companies with Europe-wide reach, with subsidiaries in many countries and what have you. Right now, we have a new contract with a leading German car manufacturer's subsidiary, which will be the largest customer we have had all the time. So the growth in that respect also is ongoing. Number 4 of our growth initiatives is internationalization. weclapp as a platform can easily be into weclapp as a platform, you can easily add new language layers. But to internationalize also our marketing model, we have also to internationalize the content we have been producing in German language. And this is what we're currently doing. The first country we want to address and the first language will be Italian for some reason, which I'm ready to explain to whoever is interested in learning more about that. But we'll add France, Spain, and later on the first English-speaking countries. So internationalization will give our organic growth an additional boost. Number 5 is artificial intelligence. I already mentioned that the platform architecture helps us to get the data to feed neural networks with the needed fodder to create machine learning algorithms. One, for instance, is forecasts of bad debt per order. We use artificial intelligence in particular to help our customers become more competitive than without. And the 6th driver will be M&A, obviously. We're striving to address competitors from the traditional ERP sector and try to win them over, convincing the customers of the target to migrate onto weclapp. Migrating onto weclapp is our day-to-day business, so we feel that this won't be too much of a difficulty in convincing those newly acquired customers to move over onto our side. So you see, growth is imminent, growth is on our agenda, and management is working hard to make this happen.
Excellent, thank you for that. And that's a very detailed response to outlining all the major growth initiatives. I think also you've been quite open about stating that you intend to IPO the business at some point. Could you just talk briefly about what the milestones are that you are looking to achieve before you embark on that process, and what the rationale is for that?
Right. I was talking about M&A, and obviously M&A and growth, wherever you look, is money intensive. So looking to fill the cash box with the means to actually carry out this strategy, we feel an IPO is the best financing opportunity we might have. So 2 years ago, everybody was laughing at that plan and telling us, "Hey guys, you're mad. It's a 3 million company. What are you talking about?" Right now, it's a 7 million company. 2 years later, with prospects, with proof of concept, I would like to call it. But still, it's not the 7 million company we want to take public, but it is a 20 million company. So how do we get there? We have a couple of milestones. On the one hand, organic growth to 11 million in 2021, which I feel confident we'll make. And on the other hand, the M&A activities. That is one of the milestones ahead before we start really working on an IPO is an acquisition in the amount, one or two, in the total amount of around 10 million revenue from the targets. That will make us a 20 million company. And before we have not reached these milestones, the IPO is in the back of our minds, and we're working hard to get there. Because in the end, if you look at recent tech IPOs, we feel a larger weclapp will be a unicorn. I was talking about ambition. Some people are still laughing at us if we tell that, but myself, even when I applied for that job, I was so skeptical, I can tell you. But now, day after day, I get closer to that plan, and I'm day after day more convinced that we can make it.
Thank you for that. And I think finally, we've spoken a lot about weclapp, and clearly that is a very exciting prospect for the company overall. But perhaps are there any other parts of the 3U portfolio that you feel are attractive and want to highlight? What are the main things that you would highlight to investors?
Right, yeah. If you look at our renewable energies portfolio, we are generating power, electrical power, from wind and solar. It's 60 megawatt we have in our portfolio. Obviously, you can grow that business only by M&A activities, else you are depending on the weather conditions. Still, if you look at current market prices, a portfolio of 60 megawatt can be valued at around 40 to 60 million euro also. So given our current market cap of around 62, 65 million, this is already 2/3 of our market cap is that renewable energy portfolio. What we've got on top is our e-commerce business, aside from a number of marginal activities. And this e-commerce business is quite successful also. It's been growing at 40% CAGR over the past years. We are now at 20 million, 24 million this year. And this having said, the drawback in that is that strong growth led our supply chain and logistics activities to the limits of capacity. So what we are currently doing is we're working on getting back into the black, enhancing profitability. What are we doing in that respect? One thing is procurement. Obviously, in a trade company where you buy goods and sell them to customers, you always have a high cost of materials ratio. And improvement in procurement is one lever we're trying to pull to make that e-commerce business profitable again. Else, we have now started to build a new distribution center in Koblenz, in the heart of Germany. And the third issue is that we are trying to improve the overall efficiency by more automatization and more efficient processes. And we know where the issues are, and we're addressing them. So also this e-commerce business at around 24 million, as soon as we've got it back in the black, is an attractive business model we have. So overall, you get weclapp on top of the current market capitalization, and that is a consideration which I would like to convey to our listeners and readers. Right now, we are in touch with a number of larger banks who 2 years ago turned their backs on us, and now are becoming curious. And if you look at the share price development, I think it's not only those banks, but it's also some investors too, who feel that there is more potential in 3U than you would guess at first sight.
Okay, thank you. That's a very nice place to leave it. Unless you have any additional comments, I thank you very much for your time this afternoon and explaining the investment case, the 3U holding investment case, very clearly for us.
It's a pleasure talking to you. It's a pleasure working for 3U.